here are two stocks that I think are actually going to do quite okay even if the market falls due to the conflict with Iran. The first we have here is OLN, Olin Corporation. They manufacture a lot of chemicals and also ammunition and military parts for the US military. So one would have to imagine that the conflict in the Middle East is likely to be bullish for this particular stock. It was up 6% on Friday before the strikes from the US and Israel, and I would imagine that this stock is going to outperform quite significantly going forward, both because it is in an industry that is typically considered a safe harbor and rather late cycle, that being process industries, chemicals, and all the rest of it, and the potential for the US to need more ammunition and parts and so on for their military. That may make OLN quite well positioned going forward. Additionally, on the indicator, it looks very promising. We've had a buy alert down here and potentially crossing into a bullish regime in the near future. Right now we're sitting at around 89% probability of that. So I think this could be a real sleeper pick, and it's one I'm likely going to add to my own portfolio. And if we take a look at OLN over the S&P index, you can see we've hit some kind of a double bottom here on the monthly chart, which is, to me, a very bullish sign. It probably means you have in some way already bottomed out on the ratio between OLN and the market in general, which means it is likely to outperform going forward. And you could see a really significant outperformance here, perhaps even as much as 100% or so, or even more, keeping in mind that may just mean that the market in general is crashing more than OLN ends up. But I imagine we will see positive price movement for OLN going forward. So that would be a pretty decent pick for me as a stock that may potentially outperform now that we have a conflict with Iran and potentially we are in a rather late cycle environment. And the other stock I want to highlight is DXCM. This is a rather obscure health company which makes diabetes drugs, essentially. Why might this benefit from the conflict with Iran? Well, typically health tends to be a safe haven type of asset. We've already been seeing companies like Merck, Eli Lilly, and others going up quite a lot, with the market hitting a bit of a speed bump and potentially even going down. So I think healthcare companies that haven't been doing too well, such as DXCM, are likely to catch a bit of a bid. I think a bit later on you'll have the health insurers like UNH and Molina Healthcare, for example. They will probably also outperform, but a bit later, I would imagine. If we check the indicator, we're also in a parallel channel similar to OLN. I should have mentioned that I am expecting these to be able to eventually break out from these channels in a similar way that we've seen on a stock like even COP, for example. You've got a similar sort of pattern of just consolidating in a range and waiting for that breakout, which occurs once you flip into a bullish regime. So I think something similar will be happening here on both OLN. We've got a similar sort of parallel channel. I think once you get that regime flip, we could break out of this channel and go a lot higher. And a similar story on DXCM. There was a false signal over here. Price was not able to continue going up. You had a big sell-off, but I think now with the conflict with Iran and potentially more downside in the markets in general, this may be a good time for this particular stock. Might have to be a little bit more patient on this particular name because we're still not yet in a bullish regime. That may take some time to play out and to flip, so keep that in mind. But for a nice little bit of confluence and to give confidence to the thesis here, this is DXCM over the S&P index, and in a similar way to with OLN, I think this stock has likely already bottomed on the ratio, being in this sort of upwards parallel channel of sorts. You've clearly tagged this trend line here, and it looks like it is now going higher. So I would imagine this will be another stock that does outperform the S&P index, maybe even quite considerably going forward. Even if you were just getting back up to these sort of levels that it's previously traded at, you could be seeing again another 100% outperformance over the S&P, which is pretty massive. So these would be my picks. If you wanted to trade this and be safe, you could even short the market in general while buying these stocks in order to really capture this particular ratio and be protected from market moves in general. But I'm personally probably just going to go long these stocks. Up to you whether you choose to do that, but I think these names would be a lot safer, maybe a little bit less exciting and less interesting than the popular tech stocks and whatnot, but I do imagine we could see a bit of a breakout here going forward at some point on both of these names. So I do hope that's a helpful and interesting video for you guys. If you enjoyed, of course, subscribe as always for more daily videos, and I'll see you next time. Bye-bye.